Hugh Albert Johnson, Chairman and Chief Investment Officer, Hugh Johson Advisors. Many thanks for joining in. To begin with, Mr. Johnson, clearly this escalation of trade friction between the United States and China is not boding well for the financial markets or the people of the two countries either.
No, it's not, and it's obviously rattling the markets, and quite frankly, the declines that we're seeing in the market, I think, really overstate the significance of what happens if indeed the deal falls apart and the U.S. does, as they've threatened to do, increase tariffs from the 10% level to 25% level on $200 billion, and then impose tariffs of 25% on another $300 billion. It will hurt the Chinese economy. It'll hurt it significantly because about 3% of the Chinese economy involves exports to the U.S., but it won't hurt the U.S. economy nearly as much as it will hurt the Chinese economy. So in my judgment, yes, the stock market in the U.S. has declined, but I don't think it should have declined as much, or I think it's really the declines in the U.S. are overstating the importance of these tariffs on the U.S. economy. They're important to China, but they're less important to the U.S. So I think the markets are setting up, quite frankly, in my view, a buying opportunity in U.S. stocks.
Okay. If one looks at the realistic picture, Mr. Johnson, the realistic picture is that global equity markets are sitting at an all-time high, and that earnings in the US economy at an all-time high, unemployment at an all-time low, and US economy for this calendar year is unlikely to enjoy the sugar rush which it enjoyed because of tax cut. So whereas the near-term picture is looking strong, can I say from a one-year perspective, from a 6-month perspective, one needs to be cognizant of risk versus reward now?
Well, you know, all of the things you say about the U.S. economy are absolutely accurate. The problem is, or the disconnect is that prior to what's happened this week, the U.S. stock market, in my judgment, went to a level, or has moved to a level since late December, which I would characterize as very pricey or very overvalued. More specifically, if I put numbers on it, about 7% overvalued, and with the upside potential in the market in this cycle being about 3.9, 3.8%, which is not very significant. So the good news is, or the bad news is the market became pricey or overvalued, much higher than it really should be, even given the good news in the U.S. economy. So the good news, or let's call it the silver lining behind the current dark cloud of trade problems, the silver lining is the market is declining to levels that make more sense. We're still not low enough that it makes more sense from a value point of view, but at least we're headed in that direction. So that's the good news, but there's no question there are concerns in the global markets and the U.S. markets that this trade deal, falling apart as it may, is obviously rattling the global economy.
Yes, it certainly is rattling the global economy. So what is it that you think we could potentially see, if there is likely to be no deal, with respect to both the sides? How grave do you think the situation could really get for the global markets?
I don't think as difficult or as big as a problem as you might think. There's no question that it's a big problem or a significant problem for China. And as I mentioned before, the U.S. is 3.2% of the Chinese economy. In other words, exports from China to the U.S., 3.2% of the Chinese economy. So it's very significant for China. Any declines that we see are quite right when we talk about China. But I think that when you go beyond that and you ask yourself, what's the impact of the significance for the global economy as well as the U.S. economy, it's not as significant. The one thing that's almost impossible to quantify is the effects on confidence, business confidence throughout the world. That, of course, is elusive and non-quantifiable, and that I can't tell you. It just seems like when this deal falls apart, it certainly rattles confidence, business confidence throughout the world, and from that point of view is going to lead to further declines in global stock markets. But I get back to what I said before. It's significant for the Chinese economy. It's not nearly as significant for the U.S. economy. Remember, the Chinese economy, 3.2% of the Chinese economy are exports to the U.S., much more significant for China.
Yeah, fair point. Thanks so much for taking the time out and speaking with us, and we'll chat again soon. This is a developing story, and I don't think there is end to it anytime soon.